I believe 300 Tesla stock would allow me and many of us to retire by 2030. Most of us start investing with the goal of financial freedom. In this video, I'll share how we could retire on Tesla stock by 2030. Click subscribe to stay updated to more videos on Tesla. I'm filming today's video at McRitchie Reservoir, as you can see in the sign next to me. I would be able to live a simple retirement on $5,000 per month, and I believe many of you may be able to do so as well. That would require roughly $2 million for a 30-year retirement. One factor to consider is inflation, because with an inflation rate of 5% per year, after 15 years, $5,000 actually has the same purchasing power as $10,000. I believe this could be offset by having sources of income like investments, say, continue to invest in Tesla stock, or occasional paid work. $2 million is a number that works for me, and everyone's lifestyle and choices are different. So use the number that works for you. For now, we'll use $2 million as a retirement goal for today's calculation. Now it's time to calculate what Tesla stock price could be in 2030 using bear, base, and bull case scenarios. Elon Musk expects Tesla to sell 20 million cars by 2030. Let's start with the bear case scenario where Tesla only sells half this number. In all three scenarios, I'm assuming an average selling price of $60,000, pretty close to what it is for Tesla today. While Tesla is very likely to release a more affordable model for mass adoption, maybe at $30,000. This would be offset by a few factors. First would be Cybertruck. Pricing for Cybertruck would be higher, so I think the average selling price for Cybertruck would be closer to $75,000 to $80,000. The second factor would be inflation. It is higher in today's world at 5% per year, so it's quite significant. On top of that, by 2030, autonomous driving would largely be solved by Tesla and a few other companies. Tesla recognizes FSD revenue under automotive revenues. This means that in 2030, if let's say the average selling price for Tesla's hardware is $40,000, they may also recognize FSD revenue of $20,000 on top of it per car sold. This gets me to my $60,000 average selling price. With that, we can now calculate automotive revenues in a bear case, which is 10 million cars multiplied by an average selling price of $60,000, giving us $600 billion in revenue. We assume that Tesla's non-automotive revenue mix stays the same at 15%. That would give us another $90 billion in revenue. So Tesla's total revenue would be $690 billion. We're also assuming that net income stays the same, which is 15% today. That gives us a total net income of $104 billion. To calculate our earnings per share, the formula is net income divided by total stock available in the market. So that's $104 billion in net income divided by 1 billion stock, giving us earnings per share of $104. To calculate the share price, we take earnings per share of 104 multiplied by a PE ratio. I'm going to use 30, which is Apple's PE ratio today, because by 2030, in the bear case, Tesla would be a mature company. That gives us a stock price of $3,120. Next, let's calculate the base case scenario. I make two changes and assumptions here. First, annual car sales increases from 10 million a year to 15 million a year, which is still less than Elon Musk's goal of 20 million per year by 2030. Second, net income would increase by 15% to 20%. Tesla already has 15% net income today while ramping up 2 gigafactories in Austin and Berlin. When they have a whole set of fully ramped gigafactories, and when software, which is higher margin, is a bigger part of Tesla's total revenue, it is clear to see why Tesla can increase net income. In a base case, Tesla would have 15 million cars sold multiplied by an average selling price of $60,000, giving us $900 billion in automotive revenue. Assuming the same mix of non-automotive revenue of 15%, that is an extra $135 billion in revenue. Tesla's total revenue will be slightly north of $1 trillion. With a net income of 20%, we will get $207 billion in net income. So our earnings per share calculation would be $207 billion divided by 1 billion stock, giving us $207. So our share price would be earnings per share multiplied by PE, or $207 multiplied by 30 PE. We get a share price in a base case of $6,210. Lastly, let's calculate the bull case scenario. Here I make three changes in assumptions. The first, Tesla will sell 20 million cars a year, which is Elon Musk's goal. The second, Tesla's non-automotive revenue will increase from 15% to 30% because of Tesla Bot. And lastly, Tesla's net income will rise to 25%, which is the same as Apple's net income today. In a bull case, Tesla would have 20 million cars sold multiplied by the average selling price of $60,000, giving us $1.2 trillion in automotive revenue. 30% non-automotive revenue would be $360 billion extra. Tesla's total revenue would be $1.5 trillion. Net income of 25%, which is similar to Apple's today, would be 390 billion in net income. Earnings per share would be 390 billion divided by 1 billion stock, giving us $390. Tesla's share price would be $390 multiplied by 30 PE, giving us a share price in a bull case of $11,700. These are conservative calculations. Tesla's price-earning ratio is 100 today, which is more than 3 times higher what we use in these calculations of 30. So if the PE ratio went up from 30 to 60, all these share prices in all 3 scenarios double. If the PE ratio went from 30 to 90, which is still less than today's PE ratio, all the share prices you see here triple. On top of that, Tesla still have growth headroom in average selling price and margins. We can now calculate how many Tesla stock we need with a retirement goal of $2 million by 2030. In a bear case scenario where Tesla stock price is more than $3,000, we will need around 650 Tesla stock. In a base case scenario where Tesla stock price is more than $6,000, we will need around 300 Tesla stock. And in a bull case scenario where Tesla stock price is more than $12,000, we will need around 150 Tesla stock. If you're watching this video post-stock split in 2022, multiply all these values by 3 times. A few factors can influence this number. You'll need more stock if you need to pay capital gains tax, if you live in an expensive city like Singapore or Los Angeles, if you want to get involved in philanthropy, or you want a longer retirement duration. You'll need less stock if you continue investing in growth stocks like Tesla, which may be riskier than investing in an S&P ETF. If you have other retirement funds like Singapore CPF, and if you choose to live a simpler lifestyle during retirement. There are no guarantees in investing, and a very rare black swan event could cause us to lose most of our money. So I believe we should invest in money that we can afford to lose and increase our resilience by having other sources of income. Wrapping up with a stock price of $6,000 in a conservative base case, I believe many of us will be able to retire, if we choose to, on 300 Tesla stock. Everyone's lifestyle, personal situation, and risk appetite are very different. In a recent poll where I asked you, how many Tesla stock you need to retire by 2030, the answers were divided. For those of you who've already accumulated a target number of Tesla stock, like this full reservoir behind me, congratulations. For those of us who are still accumulating, remember that every reservoir begins with a single drop. If you found this video useful, please click the like button. Hit subscribe to stay updated to more videos on Tesla.